With a little bit more on the forces that are moving the markets, we are going to bring in our next guest. That is Thanos Papasavvas. He is joining us there. He's a fixed income and currency strategist at Investec Asset Management. The firm has about $100 billion under management. Thanos, thanks so much for joining us this morning. Italy, you say, is more solvent and politically stable than the markets are signaling. But does it matter? I mean, as we saw in the U.S. credit crisis, confidence can unravel so fast. How much time do European policymakers have?
I think this is a new chapter. Up until now, up until Italy was affected, clearly this was a well-controlled contagion within Greece, Ireland, Portugal, which is affordable. Now, in this chapter, Italy is not affordable. If Italy has an issue, then clearly the whole euro structure has an issue. So the policymakers, the ECB, have to sit down and plan out a strategy. This is a point where we cannot kick the can down the road for that much longer.
So, Thanos, I mean, is it days? Is it hours? I mean, what is your sense of just how urgent this is?
No, I don't think we can resolve this in sort of days or hours. I think it's a matter of sort of probably weeks or months when a resolution has to take place. So it will be with us. This volatility will be with us for some time longer. But I think this is a stage where policymakers have to either make a decision one way or another.
Now, the Italian Prime Minister Silvio Berlusconi has promised to get an austerity package passed through Parliament in just a few days. So if this happens, will this calm the markets?
Not necessarily. I think it's not about the fiscal situation. Partly in Italy, it's more about the expectations and the risk of the contagion. So it will be some beneficial. It will add some respite to the overall environment, but it will not solve the problem. I think that the fact that Italy is in the situation, the cat is out of the bag, for lack of a better phrase, and the EU policymakers have to take some more direct action.
And investors just have to deal with it, for lack of a better term. How low can the euro go? We were just talking, I mean, it broke through that 140 level. It's trading at 139 and change. How much further can that common currency fall?
We're not that negative on the euro as a currency per se. I think if we look at the euro is trading at these 130, high 140 levels because of the impact of the peripheral countries. If those peripheral countries were not there, then the euro would be trading more closer towards 180, and they are, and that's why the euro is at these levels. So we wouldn't expect the euro to cheapen up from here. I think even if a worst-case scenario were to take place whereby the euro breaks and the France, Germany, Holland, Austria, the Benelux countries move on their own with the euro could be a very strong currency indeed. So we wouldn't be looking for the euro to weaken significantly from here.
Okay, don't overreact, Thanos. Always good advice. Thanks very much. Thanos Papasavvas joining us there. He's a fixed income and currency strategist at Investec Asset Management. More than $100 billion there at that firm.